Hello. Hello, everybody. Welcome to our webinar. Thank you for joining us today. This event is jointly organized by Nikkei, scoutAsia, and FiinGroup. This is our first event in year 2023. Today, we are excited to talk about Vietnam's foreign investment outlook, and we are pleased to deliver thoughts and insights from experts in this area. We have two gentlemen in Vietnam over there. Before we start the main session, let us quickly introduce ourselves, Nikkei scoutAsia. I would like you to meet my colleague, Satchvinder from Australia. Please go ahead, Satch.
Thank you, Akane-san. Let me say what a pleasure it is to collaborate with FiinGroup for this webinar. Right. Just a quick introduction. I'm Satchvinder and I represent Nikkei scoutAsia, which is a corporate news monitoring platform that assists our clients using machine learning technology in identifying potential investments, due diligence, and understanding market trends. Which brings me to the trends that we will be sharing today, focus on foreign investment outlook in Vietnam. We are brought together and would like to welcome an esteemed panel of speakers from the FiinGroup who will share in more detail about the Vietnamese macroeconomic performance in 2022 and 2023 outlook, key challenges for business and government support, FDI, M&A capital flows to Vietnam, which includes key sectors that affects foreign investors in 2023 and beyond. Now, I don't want to take too much of time, as I myself are very much looking forward to listening to both of our speakers today as well. However, just before I hand over, I would like to just share some good news that all attendees at the webinar today can request to obtain a free trial to scoutAsia via a feedback form at the end of this webinar. So please just go ahead and request for a trial, or you can reach out to us as well. Again, thank you so much for your time, and I'm sure you're going to find this webinar very useful. Handing it back to you, Akane-san.
Thank you, Nita, for the introduction. So Dong and I will share a 30-minute presentation today. I will cover a quick update on macro economic outlook for Vietnam in 2023, and then we'll continue with a detailed analysis of the foreign investment outlook. So looking back at the Vietnamese economy last year, it was a very strong performance. As you can see, 8% growth. That was one thing driven by a continued strong performance in exports. That was what helped the Vietnamese economy went through the 3 years of COVID. But a bigger contribution to that 8% growth last year was a very robust recovery in the domestic market that led to a private consumption-led growth in 2022. And that performance was achieved despite a lot of challenges from the global economy, as we are all well aware. And in particular in Vietnam, actually, both fiscal and monetary policies since Q2 last year quickly turned from the expansionary position to a quick tightening. Like fiscal policy, like for I think first time in the last like 20 more than 20 years that actually the budget were recorded a surplus, right? So a big bump in revenue, while the government was very prudent in public expenditure. So actually a very tight fiscal policy last year, 2.6% primary fiscal surplus estimated for the entire year. Also from the monetary side, the State Bank of Vietnam also quickly tightened money supply, and while the rates remain unchanged in the first half of the year, the policy rates was high by almost 200 basis points in the third quarter of the year. So what we are seeing this year is that the tightened monetary policy for the time being will be continued, and that is already having a big impact on growth this year. So we expect a significant slowdown in GDP growth. But I mean, compared to other countries, Vietnam still remain one of the top growth economy in the region. But even the government is expecting that growth will decline from 8% last year to around 6.5% this year. And that's because, I mean, one thing that will almost, we know for certain is export performance will be very weak this year. Already starting from November last year, we saw export has been falling until January. We did see some pickup in exports in February, but given the weak demand both from the US and the EU markets, exports will not be a big driver of growth for the year. What will help exports this year is actually the impact of China's reopening. That will lead both to a big export in services, mainly international tourism, and in exports of manufacturing and agricultural products to China. But all in all, unlike the last 3 years of COVID, actually this year exports will not be a main driver of growth. And related to that, already we see manufacturing, mainly export-oriented manufacturing, is also in the negative territory for the last few months. But also there's some optimism because we did see some pickup in the PMI in February, but manufacturing performance remains very uncertain for the year. What will help growth, the 6.5% government target, is public investment. So the government is very aggressive this year. What we're seeing is a return of a big public investment budget that we saw around 15 years ago, back in 2006, 2007. So this year the government will have $31 billion already in the budget for large and critical infrastructure projects, including the North-South expressways, the new airport in Ho Chi Minh City, urban transport projects in Hanoi and Ho Chi Minh, and also infrastructure boost for the Mekong Delta. Of course, there's some concern that the rate of disbursements of public investment project is still slow, but I'm more or less on the optimistic side. Already we see of the $30 billion, 93% of the money that are already allocated to specific projects. So this year will be a big boost in public investment. So at least in the short term, that will be the main driver for growth in 2023. I think growth will be stronger, maybe more than 6.5 if retail sales and services remain robust. For the time being, we do see the post-COVID recovery continues for a lot of services, including hotels, restaurants, and travels. But retail sales, there's some level of uncertainty. On the one hand, the months of the Lunar New Year didn't see big growth for the domestic market, but if employment slows down, workers in industrial zones face job cuts because of weak external demand for exports, then we will see that led to slowdown in retail sales. But at least we still expect two drivers for growth in 2023, namely public investment and services, including trade, hotels and restaurants, and travel. So in terms of macroeconomic policy, I think the main challenge for Vietnam is the fact that inflationary pressure remains. Why we see in a lot of advanced and emerging market economies is already in the disinflationary process. But Vietnam, inflation keeps on rising. So at the moment, February headline CPI is at 4.3%. I think the good news for February is that there's been already a significant drop from 4.9% back in January. But for the State Bank of Vietnam, in its conducted monetary policy, their concern is that core inflation is still outstripping headline inflation. So with the government inflation target set for the year at 4.5%, SBV's message is that they still have to be conservative, meaning that the stance of monetary policy is at least being kept unchanged at the moment, with the focus on controlling inflation. The interpretation is that as long as they see inflation has not been in the disinflationary process, they will not change their position on monetary policy. So as you see, what happened last year was that the focus was squarely on controlling inflation because of the rise in both energy prices and food prices. So it was basically supply-led inflation for the first 3 quarters of last year, and since the 4th quarter, while energy prices and food prices dropped, but demand side effect started to bite. So the State Bank of Vietnam was very conservative, and not only they were unwilling to increase the credit growth quotas for the local commercial banks and both including state-owned banks and joint stock banks in Vietnam, but also very tight in controlling liquidity, namely the money supply. So their view is that while the Fed and other central banks still on interest rate high, so SBV has also no choice but to keep policy rate at a high level at 6%, and the deposit rate are at 8 to 9%, and lending rates now are between 12 to 14%. So what the State Bank of Vietnam, in terms of the conduct of monetary policy at the moment, is that what they can do at the moment is they see less pressure on the VND, then they can stand ready to provide liquidity support to commercial banks, at least allowing banks to start gradually reducing deposit rates. And that's what we already saw happening in the last week also. So commercial banks have been cutting their deposit rates anywhere between 50 to 100 basis points. But as long as they are still vigilant on inflation, interest rates will remain high, at least for the first half of the year. Another policy focus for the government, but also in particular for the central bank, is to replenish the FX reserves. So last year, like many other developing countries, the State Bank of Vietnam was very aggressive in using FX reserves to defend the VND, at least in the first 3 quarters of 2022. So FX reserves fell from $110 billion to $80 billion by the end of the year. That's almost 30% drop in FX reserves, and that led to some nervousness in the financial markets as FX reserves fell below the thresholds of 3 months of imports. So that's why late last year, SBV decided to reduce the size of the intervention, allowing more flexibility to the exchange rate, widening the trading band, and also thanks to the market interpretation of the Fed won't be slowing down in their policy rates hike, and the US dollars fell against other currencies. So VND by November fell by almost 8.8%, but recovered quickly. So VND for the entire last year fell only around, I think, 2.8% against the USD. So the view is that given the USD will not be strengthening, then the State Bank of Vietnam will be ready to start buying up reserves. So that's what they started right before the Lunar New Year and has been continuing to do it ever since, achieving two objectives. One is to basically bring reserves back to the preferred level of $100 billion. So more than 3 months of import, and second, by buying reserves without sterilization, they will provide gradually more VND liquidity to the market, and that was the main reason behind the drop in the deposit rates on the part of the commercial banks in the last 10 days or so. So if you for the outlook for 2023, the government is still very committed to achieving GDP growth of 6.5%. So this is not a very, very ambitious target, already down from 8% last year. But in my view, it's still a very tough target to meet, given externally exports will be weak and locally interest rates will remain high. But I think a lot will depend on the public investment disbursement for the year. If they can spend somewhere 90% of the $31 billion budget for infrastructure, then that will have toward this 6.5% growth. But that will also mean, but to achieve 6.5, I think they will need to take what I call a narrow window. Once the Fed stop hiking rates, then SBV can be ready to pump more liquidity and help reduce interest rates, basically turning monetary policy to support growth. And if they can get credit growth around 15% for the year and public investment at 7%, then that 6.5% will be achievable. But then the priorities will be to maintain stability in the financial sector. For the banking sector, I think because of the weaknesses in the real estate market and the high interest rate environments, we will see a higher non-performing loan for almost across the whole banking sector for the year. But looking at specific banks, except for some small sized banks that will need liquidity support from the SBV, I think systematic risks remain low, at least in the short term for 2023. So the main concern will be the corporate bond market that I believe will still be in the state of distress for this year and also next year. So basically, non-financial firms in Vietnam are cut off from the corporate bond market, and most of the real estate developers in country will see their corporate bonds issued in the last 3 years are maturing this year and next year. And the policy discussion at the moment is that the government will stand fast on not using tax revenue for any significant bailout of the corporate bond market. The support will be through revised decrees on corporate bonds to allow easier restructuring on the part of many real estate developers. And also the recent signs are that while SBV will not be aggressive in signaling credit packages from commercial banks for corporate bond market restructuring, but at least the developers will have some relief in terms of getting both the bank loans and some corporate bonds being restructured without being classified as non-performing loans and impaired assets. So I think overall the growth is losing momentum for 2023. There's the distress in the corporate bond market will continue to send negative news. But overall, as long I still believe in the sustainability, in the health of the banking sector, and whether growth will be anywhere between 6 and 6.5%, I think that's very feasible for the year. And as long as the bank remain healthy, then with the positive impact from China reopenings, that I do see that the second half of the year will begin to see some recovery and some growth return to many, not only domestic market-oriented industries, but also export-oriented manufacturing as well. So maybe I'll end my macro update here and turn over to Mr. Do.
Yes, thank you, Anh Thành. In the next slide, I would like to give you a quick update on the foreign investment situation in Vietnam in 2022 and also the first months of 2023. As you may see on the screen, the newly registered FDI capital recognized a downward trend in 2022. The main reason for that downward trend is mainly due to the global macroeconomic challenge, including the recession fears, tightening monetary policy globally, and prolonged supply chain disruption, and also some Vietnamese domestic challenges. For example, the liquidity crunch or the weaker domestic consumption. And the Dow trend continue in the first month of 2023. And the next slide, I would like to focus on the analysis of the newly registered capital. As you may see on the screen, Japan, Singapore, China, Hong Kong, and Denmark and Korea continue to be the leading foreign investor in Vietnam in terms of the newly FDI registered capital. And the manufacturing, utility, and real estate are the key sector receives the strong investment from the foreign investor. If we combine the mainland China and Hong Kong capital, the Chinese investor became the second largest FDI investor in Vietnam, just behind the Japan. And in recent years, the Chinese investor tend to diversify or relocate their facilities to Vietnam, not only to enjoy the local supply chains here, but also to reduce the impact of the US and China geopolitical tension, and also capitalizing on the incentive from the various FTA Vietnam joined recently to boost their export globally. And the next slide, we would like to deep dive analysis the manufacturing and utility investment by foreign investor. Here we see some investment in the LNG and wind. For the LNG power, as you may know, the foreign investor has some difficulties in negotiating the PPA with the EVN, the sole wholesale buyer of electricity in Vietnam, in terms of the electricity output committed by EVN to purchase, or the pass-through mechanism to pass on the input price of LNG to the EVN. So I think it will take time for the foreign investor to implement the LNG power plants in the time to come. Regarding the manufacturing sector, I will deep dive analysis this point later on in my presentation. Regarding the M&A, last year also, due to the increased global and local market volatility and challenge, we see that the M&A due value and volume reduced significantly. Our M&A data here include all the domestic, inbound, and outbound M&A transactions in Vietnam we collect from the various sources. One notable change on the slide is that in recent year, some capable local firm emerged to lead the M&A transactions in Vietnam. The local firms take advantage of the M&A transaction to expand their business or investment portfolio. Notable names in this area are the Masan, or the Viva Land, or VP Bank, or PVI, as shown on the screen. Regarding the inbound M&A by the foreign investor, with the same reason, the inbound M&A deal volume and value also record a decline by 28% and 74% respectively. And the Singaporean, Korea, Japanese, and Spanish are the most active player in the M&A transactions in Vietnam. And the most attractive sector for the M&A investor are the utility, technology, retail, and financial service. And the next slide, I would like to give you the highlights some sector, not all, but I think that they are the sector that may be promising for the foreign investor in the year to come in Vietnam. The first one is manufacturing. As you may know, for many years, Vietnam was seen as the location of the low cost of production. Now our economy is moving up the value chain, steadily switching from the low labor-intensive work to manufacturing higher value products such as electronics and machinery. And our export of the electronic equipments and components enjoy annual growth rate of nearly 10% in the past 5 years, and reaching $113 million already. And the key growth driver for the manufacturing investment in Vietnam includes the China Plus One strategy, FTA, and our educated workforce. As you may see, many international firms are moving or diversifying their supply chain from China to ASEAN country, especially Vietnam, to reduce the impact of the US and China trade war, and also to ensure the security of their supply chain. Many foreign firms establish their factory in here, not only to meet growing domestic demand, but also take advantage of the incentive from the various FTA we joined recently to boost their export globally. And also our quality of the young and educated workforce, the widespread internet access and the innovative tech ecosystem are also key factors to attract foreign players to come here. And we expect to see the chance of the manufacturing investment keep going on in Vietnam in the time to come. The second sector I would like to introduce in here is the plastic recycling. As you may know, every year Vietnam has generated around 3.2 million plastic waste. However, the collected for recycling rate is around 25%, and the remaining 75% is buried without treatment, burns or disposal to the environment. And the lost value of the plastic waste is estimated by the World Bank is around 2.5 to 3 billion US dollars per year. And every year Vietnam have to import around 8 to 9 billion US dollars of plastic resin or plastic scrap for domestic production. Therefore, plastic waste is considered as the resource that not yet optimally utilized in Vietnam. We expect that the plastic recycling sector in here would enjoy strong growth in the future, thanks to recent regulatory developments, including the revised environmental protection law, including the extended producer responsibility concept, specifying more responsibility of the producer and importer in terms of the plastic waste treatment. And also the driver can also come from the commitment from the global or large local branch owner to facilitate the plastic waste recycling and increase the percentage of the recycled plastic in their packaging. And we also see more strong increase from the large recycling company in entering the sector to catch up the chain and meet the growing demand, especially for the high quality food grade recycled plastic. And the third sector I would like to introduce here is the education. As you may see on the screen, the number of the student enrollment in private education sector in Vietnam enjoy healthy growth of around 7.6%, higher than the average metric of the sector of just 2%. And we think that the sector also enjoyed the steady growth thanks to our favorable demographic factors such as the young and growing population and the higher disposable income and the rising demand for quality education or extracurricular activities. We expect to see more FDI project or M&A transactions in the sector in the time to come in Vietnam. In the next slide, I would like to wrap up and give you the outlook for the macro and foreign investment in Vietnam. Regarding the GDP growth, our economy is expected to grow at around 6 to 6.5% this year, lower than 8% last year. And the main reason for that is the softer global demands will weigh down our export and manufacturing sector. The investment and disbursement by FDI or local corporates may also slower due to the weak global and local market outlook. And as Mr. Thanh mentioned before, the domestic consumption and the government infrastructure spending may be the key driver to support our economic growth this year. And inflation is forecast to grow up to 4.5% this year, mainly due to some upward pressure on commodity price from the China reopening or continue supply chain disruption and possible rising price of some state control utility service, for example, electricity or medical service. However, we believe that it's would remain under the government control. Regarding the foreign investment outlook, in the short run, we expect that this flow may continue to be clouded by the global macroeconomic volatility and also some domestic challenge regarding the liquidity crunch or weak domestic demand. However, I think that for the longer term, the Vietnam would remain a stable and rapid growth destination for international business and foreign investor due to our stable social and political system and growing local consumption market and quality workforce of young and skillful laborers and strong global integration commitment via various FTA we joined recently. Therefore, we expect that the foreign investment flow is steadily recover in the second half this year and the following years. For the M&A, I think that current local challenge and market volatility now would present a very good strategic M&A opportunity for well-prepared foreign investor to penetrate the market and or expand their growth business here because of the more attractive valuation and the less competition for the deal and more new or distressed asset put up for sale in this situation. And again, here I would like to list out some notable opportunity by sector for both FDI and M&A in investor in the future. It includes the manufacturing, logistics, technology, financial, utility, and healthcare and education. And before concluding my presentation, I would like to give you a very quick introduction to FiinGroup, to our firm, FiinGroup. For now, in Vietnam, the FiinGroup, we are the leading business information, market research and consulting, and credit rating firm in here. For my division, market research and consulting firm, we support various foreign investors to penetrate or expand their business in here by providing the customized market study, commercial due diligence, market entry advisory, including the M&A transaction advisory. And we cover various sectors from the financial service, manufacturing, agribusiness, and service. And here I also include some our track record to support our customer in the past for your reference. And after the webinar, we will share the presentation deck for you so that you can have more time to review it in more detail. And for now, I would like to come back to the Nita-san for her running the webinar. Thank you so much for your attention.
Thank you very much for the presentation. Like Don said, we are making the presentation deck available for audience, which can be found after the feedback form. So don't forget to fill out and then leave your comment about this webinar after this program. So, and also recording will be available too tomorrow onwards. And I forgot to mention that we are receiving more questions from the floor. Of course, we have, I think, 25 minutes or 30 minutes as maximum. And we got many questions through the registration form already, and we read them, all of them, and then try to cover as many as possible through the presentation and the question and answer session after this. So maybe we can start by answering some of the questions we have received through the registration. And I see a couple of questions around the macroeconomics. So I think Mr. Guan will be the best person to answer those. First one is about the wait a minute, please. Yes. So first one is about the interest rate. How will the Vietnamese central bank respond to the US Fed further interest rate hikes? at least until mid-2023. Would you like to cover this option?
Yeah. I think the most recent message from the State Bank of Vietnam is that as long as the Fed is still on their interest rate high trajectory, then Vietnam, the SBV, cannot change its monetary policy position. But they also note that for the time, at least they are expecting, like the market expect, so two further rate hikes, one in this month and the second, and they expect it will be the final one in May. So even with these two rate hikes, the State Bank of Vietnam will not need to raise its own policy rate. And finally, once the Fed stop its interest rate hike, even though the Fed will keep the rate at its peak for the rest of the year, the key thing that the State Bank will look at is the VND USD exchange rate. So the moment they see that there will no longer be pressure on the VND and the USD will actually even fall vis-a-vis other major currencies, then I think SBV will take this opportunity even to switch monetary policy into a more expansionary mode to support growth. So in short, that means they will still be conservative for the first half of the year, and there's a narrow window to switch monetary policy stance in the second half of the year. Next question.
Thank you very much. There were a couple of live questions around the monetary policy as well, but I think it's almost covered by this. So we'd like to move on to other topics. These are more about the sector specific and especially real estate market has been mentioned a couple of times throughout the presentation. What solutions do you think should be prioritized for Vietnam's real estate market to really remove difficulties for businesses? It's kind of a broad question, but which one would you like to answer this?
Yeah, okay. So I think what we can expect from the government is that, as I mentioned in my presentation, there will be no cash bailout for both the real estate sector and the corporate bond market. We saw it 13 years ago when the banking sector in Vietnam was shaky, facing high levels of non-performing loans and also a weak real estate market. And even that time, the government refused to step in, and even the State Bank of Vietnam, the most they could do was revise decrees allowing for debt rollover, stand ready for liquidity support to the commercial banks. So this time, I think there will be a couple of initiatives on the part of the government. First, many real estate projects are facing legal difficulties relating to land use rights certificates, building permits, and the Ministry of Construction and local governments are trying to support developers in resolving these legal constraints. My own view is that I'm not optimistic, given the political climate, the anti-corruption campaign, the risk averseness on the part of mainly decision makers, the resolving legal issues for developers will will be very, very slow. The second initiative will be, I think, the rollover of a new credit program for social housing, similar to the affordable housing in advanced economies. The State Bank of Vietnam already announced that the 4 state-owned banks will be jointly administering a 120 trillion dong credit program to encourage developers in the social housing segment. The third, I think that will not be official, but I think they will try to do is to support both bank loan and corporate bond restructuring. So for bank loans, I think there will be measures to allow developers in distress to roll over bank loans, and without their loans being reclassified as non-performing loans, meaning that allow them to continue to have access to credit. And I think that will be the most significant policy support from the part of the government. For corporate bond, I think the developers will be allowed, like explicit policy support, unless they officially revise the new decree on corporate bond market. But for the time being, at least the government will not put further constraints on real estate developers being able to renegotiate the restructuring of the corporate bonds with the bond holders. I think in the medium term we will see, I mean, that the next 2 to 3 years will be the years for significant restructuring in the real estate market in Vietnam, and more M&As. I don't think M&As will happen much this year, because I think local developers will resist the pressure to sell, because they are still hoping that somehow they will get the debt rollover policy support from the government. I think toward the end of the year and next year, major M&A opportunities will present themselves. And then also, I think a major institutional reform initiative from the part, on the part of the government will be the amendment to the land law and 2 related laws, the real estate law, and I think probably the construction law, if I'm not mistaken. So we'll see the major changes to the land law and real estate law, and the drafting process actually is already ongoing.
Thank you very much.
Yes.
Thank you very much. Maybe one more question to you, then a few more to Dong-san. So there is a question about the recent crackdown on the corruption and the political changes. How would you describe the impact on the businesses?
Okay, so one thing that becomes clearer and clearer is that really anti-corruption in Vietnam now has no limit. Is no longer just anti-corruption investigations are initiated because of political competition, but now is that they start investigations whenever they see wrongdoings and potential bribery activities. So what we can expect is that there's no limit, and it will be ongoing, and we don't see it will be stopped anytime soon, meaning further investigations, further arrests will happen, both on the part of government officials implicated in these investigations, and also business people involved. So expect to see that will be continue. So the impact is that I think for me, I see it mainly in the short term this year and next year. Risk averse behavior we continue to see on the part of decision makers. People will reluctant to sign on anything. So in terms of investment applications, I think if it's straightforward, right, it's transparent, everything is in place, then you can get things going, and people will on the government will sign. But if you ask for something outside of the existing regulations, more preferential treatment, particularly concerning land, then I think expect a lot of difficulties and indecision on the part of the government, both at the central and the local levels. I think even when we have the intensification of anti-corruption campaign and even major changes at the top political positions in the long-term economic development strategy of Vietnam remains unchanged. So one thing that has 100% consensus in any policy and political debate in Vietnam, whether even you have the party having more power over the executive branch of the government, the 100% consensus is that the way forward for Vietnam is economic openness. So economic growth in Vietnam will be export-led and FDI-led. And that means they will still need to make policies receptive to foreign direct investment and continue its economic integration strategy with its major trading partners. So whether you have the current leaders in place, whether you have new people coming in, they will not change the long-term development strategy.
Thank you, Mr. Tanner. Very interesting view. Maybe we want to answer a couple of FDI related questions, and maybe Duncan would answer them. How do you evaluate the spillover effect of FDI on the innovation capacity of Vietnamese firms?
Yes, very interesting question. According to our observation regarding the interaction between the FDI and the local firm, we see that more and more the local firm participate in the global and the local supply chain to collaborate with the foreign FDI investment company in here. They may be the vendor supplier to the manufacturers of the automotive or electronic parts or equipments in Vietnam. The integration progress, I think, is it may be slow, but it steadily improved in recent year, and more engineering company in Vietnam, they can show their capability and provide the qualified product to the foreign investor. I think it's very good for our local firm. Okay, Nita-san.
Oh, yes, thank you. There is a question about the market liquidity in Vietnam. This is one of the live questions. Would you like to share your view, perspective on that issue, market liquidity in Vietnam, and how it affects international capital market around Vietnamese companies?
Yes, and Thanh answer
Okay.
first or me?
Yeah. So
I can support Thanh to answer this question later on.
So in terms, it all depends on the monetary policy being conducted by the State Bank of Vietnam in both the short and medium term. So in the short term, I think two things that are affecting SBV's monetary policy. Externally, like the first question is the Fed interest rate hike. So they are waiting for the Fed to stop the hike. That's one condition. The second condition will be from the domestic market, is the domestic inflationary pressure. So why inflation is still on the increasing trend? They want to see that it will cool off. Already cool off in February. So the SBV, their view is that they will need 2-3 more months until May to see whether inflation will be firmly in the declining trend. So we have this inflation in Vietnam, and if so, I think by June. The narrow window that I mentioned is that we have the Fed stop rising rate and inflation in Vietnam cools off. Then SBV, I think, will switch monetary position for the rest of the year. I think over the medium term, the focus will still be to develop the long-term capital market, both equity and corporate bond. So SBV have been very firm to the fact that credit to GDP ratio in Vietnam is already 125%. And for them, for now, they can accept the fact that credit growth each year at 14 to 15%, which is above the nominal GDP growth of 10%, that will have mean credit to GDP will be up to 140%. And their view, that's my view is that they don't want it to break the 140%. So meaning, and they keep issuing messages to commercial banks and also arguing with the government, and in particular the Ministry of Finance, is that long-term capital market needs to be developed to relieve commercial banks from providing long-term financing, making Vietnam less of a bank-based system, of a more balancing between the capital market and the banking sector. Okay.
Thank you very much. Thank you very much. Maybe going back to foreign investment and the market environment. Maybe Donson, what do you think will be the comparative advantages of Vietnam market to attract foreign investments compared to other ASEAN neighboring countries?
Yes, I think we observe the fierce competition to attract the FDI between the ASEAN countries. Yeah. However, according to our view, our country have some advantage compared to others. The first one, I think, it's comes from the domestic advantage, including our favorable demographic, including the young and growing population, and we also maintain a stable social and political system, and the growing consumption market. It's creates the compelling domestic demand. And second one, I think Vietnam is one of the most open country in the region. We have entered around 15 FTAs recently. So therefore, it's many foreign company entered Vietnam to establish their factory in here to export globally, leveraging on the incentive, mainly tax incentive from the FTI we signed. So I think it's main competitive advantage to compare to other to attract the FDI, and also our government commitment to improve the legal procedure and also the corruption crackdown, as Anh Thành mentioned before. I think in the short run it's maybe the painful period, but I think in the long run it's we'll have to clean the cabinet and the political system. I think it's very good news for the foreign investor and entering and doing business in here. Thank you. Okay, so the next question, please, Nita-san.
Are we still on?
Sorry about that. I was on
Yes.
mute.
Yes, yes.
Oh, sorry.
Yes.
So we are running out of time. So maybe last question for today. And this is also from the corporate bond market. What do you think about the Vietnam's corporate bonds if there is no any bailout from government?
Sorry, can you repeat the question?
So the question is about the corporate bonds.
Yes.
What do you think where the market goes if there's no any bailout from government?
Yeah. Okay. So I think several things will happen between now and maybe end of 2025. So what we are seeing now is we already have several defaults ongoing, and we'll continue to see more defaults for the rest of the year and even next year. I think for a lot of real estate developers that are defaulting on their corporate bonds, they will not use bankruptcy procedure for restructuring, right? So what they are doing is just informing the bondholders that they are facing financial difficulties and cannot service the interest and principal payments of the bonds, right? So in the past, like what we had last year, which will prove to be very negative to the market, was that the government would jump in, started investigations, and everything was frozen, right? And the bondholders realized that they couldn't get their money out anyway, despite their protests. So what we are seeing is that the defaults are happening, but in a quiet mode. And more or less, the bondholders accept the fact that there will be some form of restructuring, in either informal or that will be through they call bond restructuring schemes. Secondly, I think the government is still trying to revise the new decree 65 on corporate bonds, and there are three things suggested in the draft decree. First, they will postpone the application of the new classification of professional and retail investors and the requirement for credit rating until early 2024. So basically, you have 1 year lapse period where you continue to use the previous decree, namely decree 13153. The second amendment in the draft decree is that bondholders can renegotiate to extend the maturity of the bond to a maximum of 2 years. The third amendment is that bonds developers, instead of paying cash for interest and principal payments, they can swap for assets, namely their real estate projects, and that will happen if for the bond holders being funds and financial institutions. But even that's revised draft is still being debated. I think and then the third thing that will happen is that we'll see, as I mentioned earlier, more M&As happening, maybe starting from end of this year, and will really be speeded up in 2024 and 2025. Mainly real estate developers, they need to get their legal issues relating to their land and construction fixed, and then can sell their assets, get cash to pay back the corporate bonds. And for the time being, I think they will be allowed to, as I say, quietly restructure and extend the maturities of many of the bonds. So we will see some defaults, some restructuring happening this year in the corporate bond market.
Interesting.
For this point, I would like to add some point regarding Mr. Tang's discussion. Yeah, regarding the draft, the government already issue the decree number 8 to revise the decree 65 already, and regarding the corporate bond market, I would like to add that it's very important financing sources for the local business in here, and it's in the last 3 years the new bond issue is even larger than the increase in the long-term loans or the new equity issue in the stock market. And we expect that, as Mr. Tang mentioned before, there is no bailout from the government to support the corporate bond before. Yeah, and therefore the corporate bond issuer have to sit down and negotiate with the corporate bond holder to restructure their bond issue or restructure their investment portfolio and divest or sell them to get back money and pay back to the bond investor. So I think this process will take time. However, it will be the way we have to go through in order to handle the corporate bond distress smoothly and orderly for now. I think it may take time. I mean, it's around 2 or 3 years going forward. Thank you.
I see. Thank you so much for elaborating the current situation and the issue and the outlook altogether. It's been really nice to see many questions coming in, keep coming in. But unfortunately, I think the seminar is coming to the end now. So I'd like to thank again for the audience spending time with us, and also the guest speakers and people who send us questions. Thank you so much for participating to make the session very interactive. We always value your feedback, so please take a moment to leave a comment from the survey form, which can be found right after this Zoom webinar. It would take just about 1 minute, and you can also download today's handout when you submit the survey. And you can also express your interest in FiinGroup service as well as scoutAsia. FiinGroup's corporate data is one of the key sources for scoutAsia, so it will be also useful, I believe, for everyone. So thank you so much for your time. Thank you again, and have a great evening.
Thank you so much for
Thank
your
you.
time. Bye-bye.
Goodbye.
Thank you.